in the spotlight today is LTRO. That's in focus. It's brought risk on trade back into play here. Just run us through your expectations for the kind of impact this is going to have on the currency markets for today at least.
Well, Alishia, we do expect that we could possibly see similar amounts that we saw in December, possibly in the region of about 500 billion with regards to that LTRO. And if that does happen, we could see that risk on sentiment really improve and appetite returning quite considerably, which really puts the rand, the local currency, in good standing. And it could obviously continue improving along with the euro and other commodity currencies. So it seems like it's going to be a fairly positive day with regards to that. However, if we don't see that, we could see some pressure come through from the euro front again, and we could see a further weakening of the local unit. So
run us through the kind of trading ranges that you've pegged out on the crosses here when it comes to dollar and euro, because on the dollar it's lost 1.4% over the past month and the euro's gained 0.5% over the past month.
Yes, Alishia, it has indeed done that, but we do see that if we do see positive results come through from the LTRO, the euro will strengthen, and we could possibly see that the local unit, after having broken through the psychological 750 unit, could possibly move even lower to about 746. So that's going to be quite an interesting development during the course of the day. We could see the dollar, however, also strengthening on the back of the fact that we have Bernanke's comments coming out later today, and he's expected to deliver his testimony on the US economy, and broad expectations are for him to deliver a very cautiously optimistic outlook. So we could possibly see the dollar also strengthen during the course of the day.
So we've got a sentiment that's positive but still cautious at this stage of the game. You mentioned that 750 mark being a resistance point for the local unit. We saw it touch that a 5-month high briefly in yesterday's session, and partly boosted by the fact that we had GDP data come in slightly better than expected. But it's at that point that we saw a little bit of buying creep in from the South African Reserve Bank as well, Shireen. So, of course, while you've got some of those pull factors to consider, they're push factors simultaneously at play.
Yes, we did see the Reserve Bank enter at some point, and we've always maintained that they do enter the market opportunistically, and yesterday did present those levels. If we do see those kind of ranges again during the course of the day, we could see that happen as well from the Reserve Bank side. But it's really a lot of the sentiment was also boosted, as you mentioned, by that positive GDP number which came out yesterday.
Let's go through that GDP number and what it implies in terms of further monetary easing here in South Africa. It would seem like that's pretty much off the table at this stage of the game, and it means that domestic rates are set to remain a little bit more attractive for foreign investors for a while longer.
Yes, Alishia, it is more or less in line with what Standard Bank has been saying for quite some time. We do believe that the SARB will keep interest rates unchanged for the remainder of this year. Yes, we did see positive GDP numbers come through, and we did see the private sector credit numbers also slightly higher than expected this morning. But the SARB is still concerned and has reiterated in its MPC statements over the past few months its commitment to inflation targeting and the fact that inflation is still rising. So we do believe that the Reserve Bank will keep rates at the current level for most of 2012.
So far today, that credit extension number, as you say, coming in slightly better than anticipated. What are your forecasts for trade data set to be released a little later as well?
We expect the trade number to come in, to get back into the deficit zone. We did see a fairly positive surplus in December, but we're expecting the seasonal component to have been reversed in January. We normally see deficits come through, so we're expecting a deficit more or less in the region of about 3.7 billion for this month.